Hi everyone, it's Grace. Welcome back to my channel. So I'm very excited to share with you the April 2021 to 22 data for the housing market. If you have watched my video before, you know that I did a March data situation. So what you'll see is a dynamic kind of like month by month situation. So you'll be able to see the market movement. And because there's a little bit like a seasonal pattern for the housing market, so I just want to rule that element out. So what you'll see is the year-over-year change. And what I also want to do is to pair it up with the loan to value status that I did for the third quarter of 2021, just to show you that there is a lot of consistency between the loan to value ratio and the housing market movement there. That's a very important indicator for telling you which states and which micro housing markets are acting not normal and which ones are still very strong. And it's kind of like acting the opposite way. All right, so there's a lot of things to cover today. And before we begin, remember to subscribe to my channel and click on the bell button so you get notified immediately when new videos are uploaded. Also, feel free to give this video a thumbs up if you find it useful. So for those of you who are active in the equity market, it has been absolutely slashed for the past few days. It's getting really, really volatile. And part of it is because the Fed funds rate has just increased to 0.83%. And the other thing has to do with the FOMC meeting that's happened at the beginning of this month. But also, the Fed is turning very, very hawkish. It's indicating that it's not interested in achieving the neutral zone by the end of this year anymore. So that means the target rate of the Fed funds rate is no longer 2.5%. What that basically means is that for the next couple of FOMC meetings, for each meeting, a 50% basis point increase is highly likely. So the inflation is getting really, really bad, not just in terms of the very tight labor market. We're actually seeing people switching brands, switching products, reduce consumption, because the increase of the wages and salaries are not catching up with inflation. I mean, like, people are already talking about like increasing the salaries. They're not happy with the salaries, or they're not happy with overworking, stuff like that. But it's still not catching up with inflation, especially in categories like food, gas price, those kind of like really, really basic stuff. So in order to adjust to a healthy household balance sheet or finance, consumers have to switch, right? So the inflation is taking a very bad toll on consumer products like Walmart, Target, Amazon, and all these companies are seeing thinner margin because consumers are not just going into the stores to buy as usual as before. And so that's also reflected in their earnings report and also reflected in the stock price. So basically, like, S&P 500 just slashed below 3,900 points, and that's telling you the equity market is not going to survive the Fed rate hike and also the shrinking of the Fed's balance sheet. And starting in June 1st, we're gonna see the kind of like the takeoff of the shrinking of the balance sheet. And just imagine, like, basically all the stocks, I'm not saying like all, but almost all the stocks are going to behave positively related to the Fed's balance sheet. All right, so I've covered a lot of that, and you can go ahead to my Tableau profile to take a look at those charts by yourself. All right. So the other thing that I want to mention for the equity market is that I think the equity market is a more precise term to describe the stock market because it's pure equity. Basically, you just put in whatever money you want in it, and then it's going to grow like a golden goose, right? So the value increases so much that people just build wealth. But as the Fed's getting more and more hawkish, I do see a value flow taking a shift. So up to, I would say, December of 2021, people just put more money, put more cash from the bank to the equity market. But right now it's reversed. So people want to avoid that risk and they want to cash out. They want to obtain the value before things get really, really bad. So that's what's happening right now. And the stock market has a very close relationship with the real estate market because, equity market is naturally volatile. So in order to preserve that value, you kind of have to move it from one asset type to another. So that's why you're kind of seeing some regional real estate markets are still going up like crazy. It just doesn't make any sense. So we're gonna go into these micro markets today to take a look at like what's really going on. So what I'm gonna do is to put up the charts for the April status as well as the March status that I did in an earlier video. So you'll be able to see the change, right? And both these charts are the inventory change. So basically the for sale inventory that's like available right now on the website. So both these charts are taken from Zillow, and they also reflect the same regions, just on a slightly different timeline. And the color legends are exactly the same. So if you don't know what it is, basically the yellow color means that the inventory is increasing. So more inventories are hitting the market, and the blue color indicates that the inventory is going down. So not as many inventories are available for sale as before. All right, so these two color legends are exactly the same. So we can compare them side by side. All right. So as I mentioned a little bit in the last video, you can see that like these regional housing markets are taking a bad toll. And I like to make the analogy that like these housing markets are behaving like the bonds market, because the increase of the interest rate, especially the fixed mortgage rate, has taken a bad toll on these markets. But what you're seeing is the inventory change. The price change is a little bit different. And the first thing that I want to draw your attention is that like some of these areas are getting a little bit worse off. And you're seeing a micro-regional difference. For example, like in March, both Pocatello and Blackfoot are taking a really bad toll. They're like having a major allergic reaction. As soon as the mortgage rate increased, the inventory is hitting the market by 71%, by like almost double in Blackfoot, right? But when you're looking at the April status, this tells you that Blackfoot is actually behaving worse than Pocatello. And places like Idaho Falls, it's saying the year-over-year change of the inventory is 0. So that basically means that the supply and demand is kind of like balancing right now. While in March, when the mortgage rate was not as bad, it was still decreasing. Right, it was still like negative 9%. So this is a major reaction that you need to pay attention. Like 9% increase of the inventory is not normal. So basically means that like places like Idaho Falls is reacting to the increasing mortgage rate as well. So this market is balanced. Sellers no longer have the upper hand to ask above asking price. So it's shifting more towards like a buyer's market right now, right? And then Blackfoot is getting basically the same, right? And then Pocatello is behaving a little bit better, but it's still increasing by 50% inventory. So these like super micro market movement is what you need to pay attention to, the position of the buyers and sellers at the same time. And then what you're seeing is that some regions are actually getting a little bit better in terms of the inventory change. For example, like in Mountain Home, the year-over-year change for the inventory used to be 6%, so it increased a little bit in March. But then again, in April, it's actually taking a better turn. It decreased by 14%. So for this market, it's actually getting a little bit better when the mortgage rate increased further. So that's kind of like a little bit strange, but the way that you interpret the market is take it as it is, because that's the real market movement, right? And then the other part, the other market that's also taking a little bit better turn is Twin Falls. While it's increasing by 4% in March, then it became negative 1% in April. All right. So in Idaho market, it's very, very mixed. So that tells you where buyers and investors are flowing into. So right now, let's head over to the housing price year-over-year change for both March and April. And what you're seeing is that it's actually not behaving exactly the same way as the inventory change. So in the color legend, the green color means that the housing price is going up, and then red is going down. And I'm actually setting like the white tone for 10%, because it's kind of like because the inflation rate is still going up. So even though it decreased a little bit to 8.3% in April, I think that it's probably still going to go up, like maybe around 10% or something like that. So that's why I set that number there. All right. So when you're looking at these two maps, there's actually not that much change. But you have to understand that this is month by month change. So even a little bit of the number change, it actually is very telling. So let's look at the Blackfoot. Remember, in the inventory change, we actually see that in Blackfoot, the inventory is increasing by 100%. That means double. So double the amount of inventory is hitting the market. And then when we're looking at the housing price, so in March, it increased by 22%, and then in April, it increased by 20%, right? So that's the increasing rate is slowing down a little bit, even though it's 2%, but it's month by month. So that's very telling. That tells you that it's gonna, the price peak will probably take place sooner than expected. When the price is peaking, what you're seeing is that the year-over-year change is 0, right? And then in Pocatello, the year-over-year change is actually the same. It's 29%. But when the mortgage rate is hitting higher, we're going to see the year-over-year change going down, even though it's still positive. All right. So just go into these markets to see those like tiny little movement, and this is month by month, so you should like really pay very, very close attention to it. And also the other thing I want to mention is that the housing price is like moving like a turtle, sort of, because it's a different kind of asset type. Right, it's fixed assets, so it's not going to behave the exact same way like the equity market, right? As soon as the interest rate is going up, as soon as the Fed is moving hawkish, it's like being slashed, like right there and then. So you need to know that there is a very, very big difference between how the equity market behaves and how the housing market behaves. All right, so next we're gonna look at some of the other areas. Because of the time constraint, I'm not going to cover like all of these areas. You can go into my Tableau website and take a look at it by yourself. Then in the Washington area, I'm not seeing a major color difference. I'm gonna point out a few. In Wenatchee, I hope I pronounced these areas correctly, the inventory actually decreased by 4%. And then in April, it decreased by 9%. So the inventory is actually getting more scarce as the mortgage rate increases. And then in Walla Walla, it increased by 2%. And then in April, it actually decreased by 2%. So that market movement is actually a little bit different. And then in Pocatello, this is one of the markets that's the inventory is increasing like crazy as soon as the mortgage rate increase, right? In March, it used to be like 55%. And then in April, it becomes like 44%. So I would say that in the Washington area in general, it's actually getting a little bit better. The inventory is decreasing. So you definitely need to like pay attention like to these like regional differences and understand like why it's happening that way. All right, so let's go ahead and go to the housing price. And then remember in Walla Walla, the inventory is actually decreasing. And for the housing price in March, the year-over-year change is 31%, and then in April is 32%. So it actually becomes, it's still increasing. So the momentum is not slowing down, like at all. So just by looking like at the colors here, like the area that's taking a different toll is the Centralia area. The year-over-year change for March, it used to be 13%, and then in in April it becomes like 10%. So that is actually slowing down quite a bit. All right. So the inventory change for Centralia in March, it used to be like 14%, so increased a little bit, and then in April it increased by 9%. It's actually decreasing. And then in the price, it's actually slowing down quite a bit. So there's a little bit of like conflict here. It doesn't really go by when the inventory increased, its housing price increase is slowing down. So there's a little bit like a paradox here. It doesn't really make much sense, but it is what it is. All right, so now let's head over to Oregon area, and then you can take a look at like just the general color is actually getting darker from March to April. So that means more inventories are hitting the market. For example, in Prineville, the inventory change increased by 30%, and then in April it increased by 33%. So right, so this is month by month, and it is taking a very bad toll. As the mortgage rate becomes higher. And then for this area, you can clearly see that there's a color change. So in Roseburg, in March, the year-over-year change is negative 6%. So it actually decreased by 6%, but in April, it becomes 0%. So that market is balanced. So basically, like the sellers and buyers are balanced, and it's shifting from the seller's market to the buyer's market as we speak. All right, so you're gonna see like the housing price is slowing down like majorly, right? And for like these regions, you're also seeing like the colors getting darker, right? So it's interesting to me, like these different types of states and markets, like they're behaving very, very differently. So you should know that like the housing market, it doesn't behave the exact same way. All right. And then we're going to take a look at a few of these areas where the colors are getting darker. In Winnemucca, Nevada, the inventory increased by 42%, and then in April, it increased by 61%. So that's very telling. So focus on these areas that are the inventories are increasing like crazy. All right. Let's head over to the price for a little bit. So in Prineville, the year-over-year change in price is 17% in March, and then in April it's also like 17%. So like month to month, these housing prices are not moving accordingly. So there's definitely something happening in the market that you need to, go over to see like what's really going on. What's keeping the housing price from slowing down? There's obviously something's going on there, but it's behaving very strangely. For example, like in Roseburg, the year-over-year change in price in March is 23%, and then in April it actually becomes like 24%. So there's different types of market movement there. So let's do this. We're gonna go over to the Zillow website to take a look at like what's going on. Like in this area, we should be able to see like the price is slowing down, but it's actually not. Like more inventories are hitting the market, right? But the price is not slowing down. You're not like seeing price cuts. And I would like this is probably like the only one that we're seeing here, but we're not seeing like major price cuts. All right, we're seeing a little bit movement right here. So let's go into one of these properties to see like the views. Are people interested in buying this thing? All right, there's still like interest in this area, right? So what I'm guessing is that in this market, even though more inventories are hitting the market, the buyers are still kind of interested in this market. So they're going in there and they're interested in this market. We're not seeing like price cuts. And also we're not seeing like overbidding, stuff like that, because it's kind of like balancing a little bit. So there's still like interest in those areas. So what I'm guessing is happening is that a lot of people are actually waiting for the inventories to hit the market in this particular region in Roseburg, Oregon, so that they can actually buy, because the housing supply is still, or it still used to be like in short supply. So they're kind of like waiting for those inventories to hit the market in order to go into them. And that actually matches the crash of the equity market, because people want to cash out. They want to move from an asset that's high risk into one that's safe, right? That's still increasing in value, so that they don't lose value, right? If you put the money inside the bank, it's not moving at all, right? It's just the same amount over time. So I get it. Like right now, the environment is like changing a little bit. It used to be like low rates, and then everything is going up. Every kinds of asset value is going up. But right now it's shifting a little bit. So there are still like asset types such as real estate that's going up. Some real estate markets are still going up. So when you have two types of scenarios, one is putting the cash in the bank and not moving, the value is exactly the same. And then you have another asset type that's still increasing in value. And which one would you choose? Of course, I'm going to choose like the one that's still going up, right? So that explains why this market is still going up. Either they're investors, or individual investors, institutional investors, or just like buying a house to live, right? To live there. like whatever the demand is, people are still equity rich. And the other interesting thing is that like buyers right now, some of the buyers are not reacting to the mortgage rate at all because they're all cash buyers. I have to emphasize this because 2022, people are still equity rich. They have a lot of equity and they have very, very little loans right now. So if you're not going to take out mortgage to buy a house, why would you react to the mortgage rate at all? It just doesn't make any sense. So that's why 2022 and moving forward, it's unique. So now I'm going to head over to the LTV chart to just explain a little bit more, especially on the West Coast. So this one is actually from the third quarter of 2021. And the last quarter, the fourth quarter of last year actually came out. So I need to update this chart as well. So basically what this means is that you're seeing a lot of like blue color or like green colors here. So the more blue it is, the less loan there is in a property. And then when you're seeing like yellow, orange, and red, there are more loans in there. And then you can clearly see that on the West Coast, the LTV levels in general are very, very low. So that's why a lot of these like housing markets are not subject to like foreclosure. The foreclosure rate is like super low right now. The other thing I want to mention is that like in Idaho, we see in Blackfoot and in Pocatello that the inventories are hitting the market, even though like LTV, like major, like 85% of the LTV is less than 60%. So you can see that like the majority of the buyers in these markets are probably taking out all cash, but the inventories are hitting the market like crazy in some of these regional areas because they're moving the money somewhere else. So now let's head over to California to take a look at the inventory movement in these markets. So there's quite a bit of mix here. The regions where the inventories are hitting a lot more is like Ukiah. It used to be 31% increase, and then in March it used to be a 31% increase, and then in April it increased a little bit to 32%. So you're definitely seeing like some of these colors are changing quite a bit, just by like little by little. It's like some of these regions are increasing. And then in Clearwater, it used to increase by 30%, and then in April it decreased a little bit to 22%. So there's a little bit of like mixed here. And then in these markets, inventories are creeping up for a little bit. I actually see the market starts to balance a little bit more to the buyer's side. Still, the sellers are still having the upper hand because you're not seeing the year-over-year change to like 0%, right? In Sacramento, it's actually balancing. So like more of these inventories are hitting the market, but when we're looking at the housing price, you can actually see that it's still pretty much the same or going up a little bit. So I can say that the buyers in these markets are actually waiting for the inventories to hit the market so that they can buy, because there's not enough. So what you're seeing right now is that more inventories are hitting the market in these areas, but buyers still have relatively very like strong interest to buy.